The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, Friday is a holiday, Easter, and for those of you celebrating, of course, a happy Easter. Let's get to the numbers. Dow's down 30 at 17,551. The S&P's down 7 at 2,042. The composite index is at this particular point down 33 at 4788. So let me just move that away. The VIX is at 1461. It's only up 44 cents, up 3.11%. Going to be watching this. I've got a couple of things that are acting reasonably well here, so we're going to be watching it closely. More importantly, I want to just say that gold, and we've been watching gold really closely because I've considered it to be a high-level consolidation with limited upside, but it's the downside that we really have to monitor. And right now, gold is down about, I think it's down about 12, is it? Oh, sorry, gold is down 28. That was a quick move, that extra couple of points. And I've got a red line which I drew in as the support, and there was an arch formation, so we expected some kind of a pullback. And what I've done is that since we're in an ETF that is long crude oil, gold, soy, wheat, gas, and a couple of other, zinc, I think, I've raised the stop so that we've got a nice profit. I don't want to give away too much of that profit. And I think there will be a time to get back in. So as a result, I don't see any reason why we don't take some profit if there is a profit, if we are stopped out in the next day or so. I believe there'll be another opportunity to get back in because the commodity index has made a very, very strong move. It just needs a timeout. So we'll get to that. So gold right now down 28. Silver, let me go SI. Silver is down 0.61 at 15.270. A, B, C, D. Made a peak. D right there. Let me put that in so people can see because I got a question about, I believe it's SLW with a notation. Yes, Greg, I think you did it exactly right. There was a Chapman wave instant restart. We'll get to that in a moment. Okay, so there we are. Peak F before, and now it's a peak D in silver. So I don't see any reason why it can't pull back. Had a fabulous move. Leg C, probably going to make a peak C this week in the weekly chart. And then we'll see if silver can hold the $15 to $14.75 and $14.97 to $14.80 is actually the areas where I've got support notated. And let's go on. We're going to go to crude oil. CL crude oil is very interesting. 40.38, made a peak F. That's the way I'm notating it right now. And if this is a peak F from 5 days ago, 4 days ago, at 42.49, let me just see this, the SPY, and yep, there it is. SPY is having a bit of a bounce, a little bit of a bounce in this chart right now at 204.03. It's still down 52 cents. But you can see the red is the USO, that's the crude oil ETF, United States Oil Fund. And if you look at the green line, that's the SPY. And you can see what happened yesterday. The SPY went up on its own. It didn't go in concert with the USO. Now what we've got is the USO has been quite weak. SPY keeps having these spikes, but it can't hold. So I think the SPY is seeing buying, residual buying, which is starting to fade. We would not be surprised if we have some kind of a consolidation here. We'll go into that in a moment, but I do want to just finish up here. We've got some callers waiting, so let me just do this. I wanted to look at the TLT. This is going to be very interesting. Where did that go? TLT. Oh, no, don't tell me I messed that up again. Let me just go, if you don't mind, just want to go here, put in SPY because I did not click out, but it clicked in. The TLT is just in this trading range. It's just kind of stuck. But if it starts to break under 127, this market should have a little bit more energy to the upside, stock market. And if the TLT starts to take out the high that was made on the 18th of 129.51, be careful, because then this market is coming down, and it could start to come down even deeper because there's a peak C with a potential for a leg D above 135.25 in the TLT. I don't want to get carried away. I just want to say the near-term parameters are way more important than the outer parameters, because after all, how do you get from point A to point Z? You have to go B, C, D, E, F, etc. So here we are. The next point that we need to break above in the TLT is 129.02. On the 22nd, that was the high, and then 129.51 on the 18th. Good. Now, I think we've covered everything except the most important, which is the dollar. The dollar's having a great move today, up 43 cents at 96.08. I'm watching this closely. I'm seeing this as a potential lower lows, lower highs. Therefore, the dollar should have tremendous resistance routine, 96.30 and 96.65, the 200-period moving average, maybe a tad higher. But if it breaks above 97.35 in the next week, that is going to be very important. A question I often get is about the EDV. I'll do that because there are a number of you who are trading the EDV. EDV is at 124.20. It is the Vanguard Extended Duration Fund. And at this particular point, it's making lower lows and lower highs. So this is very important. The MACD is really trying to turn up. It hasn't. Stochastics at 18%, trying to turn up, and it hasn't. The weekly chart is starting to turn down. This is a very important chart. It goes together with the TLT, perhaps has even a little bit more information, maybe a little more subtle, and it's got the 9-period moving average of 124.69. If it breaks above 126 in the next 3 days, why is my voice so weird? Let me just have a sip of water. Hope that helps. Yep, there it is. That'll be very important. A couple of things we'll look at later on. Let's go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm very well, thank you.
Great. Well, I've been waiting patiently on gold, and I'm not sure if I need to continue trying to wait patiently, but I'm looking at throwing some money at it a little bit longer term on the weekly, and I did not get a chance to look at the weekly chart. But did it drop below the 9 EMA on the weekly, or is it still above?
So Ben, let me just clarify. You've been waiting patiently to get into gold on the long side.
Correct.
Yes. Okay. I just want to define exactly what, because you didn't quite finish that sentence, and I want to make sure that.
No, I've been watching the weekly chart on gold, and
yes.
I think it just made a peak D. Correct?
It just made a peak D. Well, it didn't just. It made a peak D 3 weeks ago.
Well, yeah.
And it went right.
The last peak was a peak D, I guess is what I was trying to say.
Yes, D for David. And what's really important about this particular peak D is that it failed to go above the previous peak C minus from January, the week of the 23rd at 125.58. It stalled. It's really encouraging that it went right to the 200-period moving average. I think it's worth talking a little bit about this. And now it's a really important period for gold. Is this pullback the next buying opportunity, or you want to now step aside? And that's what we'll discuss. Can you hold on, Ben?
Absolutely.
Okay, we've got Ben Tallahassee.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I want you to go to the gold chart. And what I've got here is the Chapman Wave price extensions with resistance and support levels. We're looking at the GLD. And if you're looking at this daily chart right here, you will see that 120 to 123 had a lot of resistance levels. 116.37 is the only support, and we've taken that out. We're at 116.45 right now, but we've gone below that intraday. So this is a very important moment for the daily. The 120-minute chart had a lot of resistance in the 119s, and we're now way below that. The weekly chart has no, it doesn't have anything in the shorter term. So I'll leave that for the moment, but the monthly has 125.90 as very strong resistance. And let me just see here. And the 99 to 97s as quite important support down below, but it's really the 110 to 109 area, which I think is going to become very important. 112, I'm sorry, to 109 area, which is going to become extremely important support. And the 120-minute chart had the 117s, and we're under that now. So this is what I'm looking at. I want you to just mention that because what I like to look at is when there's a huge number of these light blue support levels at the bottom, it's telling you that that's going to be key support. And if there are just one or two little resistance points, that means that there's a greater chance that you're going to be moving higher. So I just wanted to show that. And at this particular point, what I've got is the downside is the 112-ish area where it starts to find support. So yes, that's a picture of the support and resistance levels. More importantly, what I'm looking at in the GLD weekly chart, and I'm going to be talking a lot more about this in my webinar a week from tonight. If you go to the front page, folks, if you go to the front page of TFNN, let me just see if I can get this right now. You'll see a little blurb there that says the coming 3-month outlook in the market and which sectors could rally or fail. The coming 3 months outlook in the market, really important, is for subscribers only. But if you sign up, you'll get a 30-day free trial. And it's an exclusive event. And I think it's going to be, the more I go through it, the more I am just fascinated with the different aspects where this monthly candle, the candle of March, is going to be so informative just all around for the commodities, for the dollar, for the stock market. Just everywhere. So this is very timely. Looking forward to it. Now I can get back to your question. If you're looking at this chart that showed you, I drew in this lowercase h that goes to a continuous M formation way back a year ago, more than a year ago. I remember it being sometime, no, it was about a year ago, May, a little less than a year ago. And what is important about it is that we did exactly that. We kept making these arches, and the arches kept testing support levels, tried to rally off it, and eventually broke down slightly. And what's really important about it has been a very steady, slow, stair-step move to the downside in gold. Now, if I look at the weekly chart, the breakout that we just had, the reason why I wanted to show this is that the breakdown from May, the week of the 10th of May of 2013, it's taken till the past week, February, took until February, I got it right here, March the week of March the 4th, to regain that 200 period exponential moving average. So that's going to be really important. Most importantly is I'm looking at the stochastic, and the stochastic at 86%. If it breaks down, starts to trade in the 76, 75-ish area, it is not good because you want steadiness. I'm just going to grab the E-mini now. Oh, there's some, let me just go to the DIA. You see the DIA, when it was holding steady in the stochastic above 20%, every time it did it for a long period, the market went up for a long period. When I go to the GLD, this is going to be a very important criteria. So I'm going to say this, Ben, I think the outlook for gold, looking towards in the summertime, I think it's going to be good. It might mean that we pull back and we have another rally that's like an arch formation, this time maybe a bigger one, and we go slightly higher. But I need to see where we settle down now. I've got I'm going to show a chart in a moment of SLW, Silver Wheaton. It's been a fabulous performer. Where is it right now? Because stocks like that are going to give us much more information about what's going on. And the gold stocks led the way, and we'll see if the gold stocks start to pull back, they'll lead the way down. If they hold really well, if they give back just 1/3 to 1/2 of the gains, spectacular gains, that's going to be very important. So here's what I'm saying to you. If the dollar rallies one more time and knocks the GLD down to the 114-ish area, what I would say to you is, at that, if we aren't in conversation between them and it just suddenly does that, I would give it a day or two, but somewhere in that area, I would just nibble. I really mean just to get a real feel. Is this what I want to hold as a longer term? Will it allow me to do that? So just nibble on the GLD. I believe that the IAU, which is what we sometimes go into for my subscribers, I remember I just heard a little bit about what Tom was talking about, and I'm not sure that the characteristic of the iShares Gold Trust is as strong and as good a history as the GLD. I happen to like it. I'd have to go into that a little bit more to check it out. But either one, just a little nibble to get a feel. And then so you're in it.
Yeah.
And that way.
Right, correct.
I just want you to be able to get the fluctuation between the dollar, the general market, gold, the gold stocks. That's just a nice way, a GDX. That could be another way to do it, because that is, in fact, the market vector's gold miners. It's the actual stocks, and it's holding a little bit better. Maybe even a little nibble on the GDX saying, this is not my position. This is just a starter position. It's what I call the pilot light initiation. And that's going to tell you, do I add or not? What?
Good. And maybe a better question is the dollar. I mean, I know you and Tom and others have mentioned many times that the direction of the dollar is very, very hard to change on a long-term trend. Do you see the long-term trend as continuing to go down or up, or do you have an opinion on that?
That's a great question, and it's a great comment, because I've always talked about the trends in the currencies tend to stay for a long time, a very long time. Even this consolidation between 100 and 92 has gone on since it's almost a year. Look, it's exactly a year this week. It's March the 13th was the high of 100.39. and we're at 96 right now, and we have been trading all this time between 92. That's only 8 points. Let's call it 8 points. 8 points, that's 8%, trading in an 8% range. Now, it's very important that the way I'm looking at it and the way I'm looking at the dollar, I want to see the dollar, if it's going to show enough strength to retrace back to the upper level between 99 and 101, then I want to see it in the next, what's today, Wednesday? By the time I do my webinar next week, if the dollar is actually trading in the 97.50 to 90, touch 98, that's going to be really important, because let's see what the gold does if that happens. So have a little patience. Let's talk again maybe, well, Friday we won't be here, maybe Monday again, but in the meantime, you could nibble on either GDX or the GLD, but it's only a nibble on the next pullback of maybe 2 points.
Good.
Hope that
Thanks,
helps you, Ben.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So we're looking at silver wheat and SLW. Good grief. Just started talking and a little scratchy throat there for some reason. A little lubrication. That's what I needed. So the question was, Greg wanted to know, silver wheaton. Question is, actually, he wrote it very nicely. Good morning, Basil. Would you go over the daily wave count on silver wheaton? I had a peak D on 212, with it going to peak G on 4th of April at 17.73. It hit another peak on 317 at 18.5, so my wave count must be wrong. Was there an instance restart on 212 peak D, making the 317 peak D, or did I make a mistake somewhere else? Thanks, Greg from Portland. Hey, Greg, you did it exactly right. I did exactly the same as you. And when I saw this recent acceleration up, I said, oh, I got to change it. It was an alternate count E/A after that peak D that was made in, what did you say, 12, was it? 12th of February. Only 3 bars, and it broke to a new recovery high. Then it went to F/B. The stochastic did pull back. The MACD did pull back. You could have put a down arrow, but I would have kept that because it held so nicely on that 9-period exponential moving average. So that becomes a G/C. And then obviously when you resolve, you can't go to an H. The C becomes a D, and here we are. Now I put a down arrow. Maybe it's a little premature, but I put a down arrow because I can see that the stochastic has turned down under 80%. The price has gone under 9-period moving average, and the MACD is turned down, but it has a couple of other indicators within it, and especially the on-balance volume, which is turning down, which suggests to me that I'm correct in putting a down arrow from the high of 18.50 on the 17th. That's number one. That just says we've got a sell signal. The down arrow should imply a sell mode. Probably I need a second day underneath the 9-period moving average to confirm that. So as I say, it's a little premature, but everything is meeting my criteria, number one. And number two, if you look at the weekly chart, look at this weekly chart. It's made an ABC minus, breaks down, goes to the low of $10.04 on the 22nd of January, and then it goes peak A, peak B, peak A. I don't want to say peak B yet because it's a weekly chart. We have to wait until Friday, wait until tomorrow, Thursday. So it looks to me like it's not going to, it might not go above 1850, but if in fact it goes underneath today's low of 1685, the weekly will say stochastic is still good, MACD is still good. This is just a short-term pullback. The daily is going to be the rudder to give you the other information. That's number one. Number two is if you are long silver weekly, and that's the reason why I mentioned just a moment ago to Ben, maybe the GDX is the place to be if you're going to nibble at all, not gold, rather the GDX, which has held very well. Why? Because the gold stocks led us up. I actually personally, over the years and years that I've been looking at gold, and I go back to gold all the way from when my father used to trade gold from back in South Africa, over the last 12 years, I'd say, I really prefer to see the gold stocks move before gold. It's a better way to do it because what it's saying is that there's enough buying interest in the real thing, which is the actual trades on gold, not gold itself. And that says to me that gold should follow. And I think that's exactly what we saw. We saw gold following the stocks. And now we're going to see if gold pulls back, where do the stocks stand? Are they going to still say, wait a minute, we are the strong characters here. Those monthly charts might look horrible, but we are starting to improve. And this, to tell you the truth, I still want to be calling this a counter trend rally in the monthly charts because it's really not this is not a very big move up. On a percentage basis from the bottom, of course it is, 10 to 17 is huge. But when you're talking about the gold itself, this is just a little blip on the radar so far in the monthly charts. So yes, so Greg, you're absolutely correct. I'm looking at this and saying the 9-period moving average of 15.89, let's call it the 15.80s in the weekly chart is going to be absolutely key if gold takes out. Let me go to the GLD because most of you look more at the GLD than you look at the contract. If gold closes the GLD at 116.58, if it closes under 100 and what is that gap there? If it closes under 114.89, and I'm going to say within a week, it could be by Tuesday, but if it's within a week, that's going to suggest to me that that whole area of 114 to 112 is going to be very important to be building a base, and we'll watch the gold stocks. So I hope that helps you, Greg. Next question I had was crude oil. Let me just go to the crude oil contract. Yeah, peak F. The MACD hasn't crossed negative yet. Other indicators have. Relative strength is weakening. The stochastic still at 84%. So I'm saying the jury is still out. If I was to be trading, I'd probably want to start a position now on the short side of crude oil, just because of the general market malaise as it stands right now. But I would not get a heavy position. It would be like an attempt to see if I can time it for a short-term pullback. And that short-term pullback makes at 40.18, it makes that whole 38 to 37.5 support really important. Just make it that. In fact, you don't have to do anything. You could just wait for the pullback and see, is crude oil something, the USO, is that something I want to buy? And it's also making a potential peak F right here. Is that something I want to buy if at 10.23 now, it gets to 942 to 920? Is that something I want to buy? Meantime, I think that its upside is limited. Downside has at least an 8% potential correction coming. Okay. Next question is, you couldn't see this chart here. Let me just have a look. I'm going to put this up for 1 second. If you don't mind, I want to see what it looks like on my little tiny screen here that I like to have to see how things show. Yeah, I can see what you mean. It's coming up right now because there's a tad delay with me. I've got the GLD. There it is. Whoa. Yeah, that is kind of tiny. I put it there for mostly for my perusal. So don't worry about it. I made a decision a few years back to start using white charts instead of the black charts because people like to print out charts. I know I do every once in a while. It's a funny thing. I print these charts out. I never really look at them ever again when people are talking about it because I get that information and I really print it out as a reminder. But I've already done the homework on that, so I have these piles of paper that I never really look at. All right, next question was XOP. So this is a good question. The XOP right now is XOP. Spider's oil and gas has made a leg D and then a peak D. It's the same situation. I can only put a plus sign there right now because it hasn't taken out. It hasn't closed well under the 9-period moving average. It's at 29.77, under 30.02, the 9-period moving average support. And this is called the S&P Oil and Gas Exploration ET, is an ETF or fund, whatever it is. Okay, and now what's really important about this is that the pattern I'm looking at is a very familiar pattern. And normally I would want to put an arch formation like this, right in like that, an arch formation to the left side support. Well, there is no support on the left side. So that says I've got to go to this level right here, right there. So my support level is at about 27.5 and it's at 29.74. So, oh, that's the music. We've got a break coming up. I'll do a little bit more because I want to do the OIX, a bunch of the other oils. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, we're back. Dow's down 47, S&P's down 8, and we're looking at the OIH. The OIH is the Market Vectors Oil Services ETF. The reason why I want you to look at it, I want to get a feel for the whole complex, and that retested its low of 2008 of 20.05, had hit 73.75 back in 2008. Whoa, that's quite a spill, 50 points. So it's a 60-something% decline. And then it rallies all the way to 55.71, back to 31, then up to around about 57, and then down to 20 at 20.46 for a successful so far retesting the H, very extended H pattern. And now we're running, and it stopped dead at the 9-period moving average of 28.44. That's the OIH, the oil services. I'm suggesting to you that this is just attempting for the first time to make some kind of a base of importance, and it's going to be really important. It's no good on the downside what it holds. It's what on the upside it's able to get to in April. So if in April you're looking at the OIH, which is at 26.35 right now, down 60 cents, and it's pulled back to the 25 to 24 area, and then it has another big rally to leg C in the weekly chart, until it really starts trading and holding in the 30 to 30.50 area. I just think this is a bounce, and that's the only way I can even think of it, right? It's just there's no point in getting too carried away. So if we look at the XOI, dollar XOI, which is the ARCA oil index, it's the same sort of thing. It's going to peak A, B, C, D, E, and that E is pulling back. I'm looking at all of these, and I'm suggesting to you that in the oil sector, let me go back to the question, original question, which was swinging around. So Bob wants to look at the XOP. Did I say it was a dollar XOP? Dollar XOP? No, it's just plain old XOP. It's a spider. Right. So look at this monthly chart on the XOP. I probably should have taken that break just to do how many times have I done notations on these? This is A, B, C, D, E. Pulls back, has a spiral right arm extension to an F, fails, goes all the way from the 21-ish area to the 65 area in April of 2011, comes back down to the 40, just under 40, and then it rallies A, B, C, D, E, F. It does make a G. I think that's going to be a G. And that G, the seventh peak, goes kaboom. It goes all the way from the 84.04 level in June of 2014 to trough A, trough B, trough C, and it drops down to 22.06. That is a whopper of a decline, right? So the oil and gas exploration monthly chart says, hey, The stochastic still flat at 13%. The on-balance volume gave a nice V-shaped turn, but the MACD and stochastic need a lot of time. Until this thing trades, it's the same story. Until it trades in the 34 to 35 area, I just have to call this a bounce. And even then, it's a bounce, but it could have more legs to the upside. So I'm just going to recommend that XOP right now fits into the category of, just like gold, step aside. There's nothing I want to do right now. I'd rather wait for support to see how do the stocks hold up, and we can look at it closer. Let's look at it again Monday or Tuesday of next week, Bob, if you can remind me. We'll do that again. Meantime, I do think that it's on its way down, 29.68 right now, and I wouldn't be surprised if this low that was made just about a week or so ago at 28.41, if that's the big test. If it takes that out, then the level that I've given as a base right now says that 27.45, the low of the 10th of March, is going to be absolutely key. If it takes that out and goes into the low 26s or 25s within the first 2 weeks of April, that's just going to say, H pattern goes to an M pattern, lowercase h to a lowercase m, and that's not something you want. You want to trade it from the lows to the highs and short the highs, coming back down until one day you're wrong because it breaks out either upside or downside. Dow's down 60, S&P's down 10. I had a quick question. So what was your position? You were talking about shorting. Yeah, we are short the Dow. Dow actually isn't the weakest right now, but we are short the Dow. We're long one of these sentiment indicators. I don't know. I'm telling you right now that if you look at the VIX, this is a very dangerous period to be long, the VIX, because when it comes down and it breaks, but it doesn't make a big spiral to the upside with a V-shaped pattern, it could keep just failing. And the VIX could go back like it has in the monthly chart, because it just took out very important 15 support over the last week. And the VIX is now at 14.88, up 71 cents. The low was 13.75. I would have wanted to see that doji. Did it take out the low 1375, 1379? Oh, good. The doji is the low so far, and that's really important to me. It isn't often in the VIX index that you get, you can't call them recovery lows. They're not recovering. Unrecovering lows, unrepentant lows, with the tiniest candle making a doji. Candles, you can read books and books on candles. I happen just to have a couple of, like 3 candles and a couple that I've termed my own terms, like the Roman candle or the long-legged doji. And that's, for me, it's great. I love that because it gives me information that there's that long-legged doji at the top of 32.09. It gives me so much information. I don't clutter my mind with a name for every single candle that's formed, because that I would not, some people can handle it really well. I don't like that. I just don't like clutter. My desk, that's a little different. My 3 discs, well, that's different. And I just wanted to say that finding a little doji candle at a potential low of not significance, but at least a shorter term low, is at least for me a benchmark. I can say at 13.74, we've broken that low. Be really careful. At 14.87, it's best to see the 15.34, is that 34.24? 13.24 level, 9-period exponential moving average, taken out decisively by tomorrow or Monday. Okay, so let's get out of that. Enough with the VIX index. I've given you parameters to know. Let me just finish this up. If the volatility index is able to get to the 16 level by Tuesday, I believe we made a top here that can be not called a near-term top, but probably a short-term top. For me, there's a big difference. Near-term is hours to days, meaning 3 days-ish, and you should turn around. Short-term says you can go 5 to 10 or 12 trading days, stretching out over 2 weeks. But the short-term says that's the only way you can go from near-term to short-term to more intermediate term if you're getting a trend. So it could chop around. It can go from near-term to short-term, long, and then short-term back again, because it goes sideways in the H pattern. So I want V-shaped. I love the V-shaped pattern, either up or down. Why? Because you've got momentum, you've got velocity, you've got everything that pertains to speed. I want the speed, and that's important. So here we go. We're going to have another. We have a break coming up, and then we have kind of the conclusion. And that conclusion is going to go into a couple of things that we haven't looked at before. I'll be looking at Berkshire Hathaway and that Berkshire Hathaway chart. I'll be looking at in terms of the weekly, the monthly. What is it doing, and other stocks as well.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. So the question also was Hess Corporation in the oil business. Same thing, hit the 200-period exponential moving average, pulling back here at 52.11. HES is a symbol. I haven't got a signal yet in the MACD that it's turning down. I have other signals that say at 89% the stochastic. We'll have to see how it holds the 50.70 area to 49.23 if it does have a deeper pullback. But what I'm looking at here pertains to other things as well. So let me just put up the ESMAH 16. Gosh, I don't know if I put that 10-minute chart up for people who are looking or trading, because I was going to do that earlier. I did it during the break, and I think I forgot to do it during the show. I meant to do it. I did show the 120-minute chart. Yeah, so this is exactly hit the left side, right side, almost price time match of the low that was made, E-mini 10-minute, at 22.5 on the 22nd, that was yesterday, with a low of 20.28.75. And then overnight it sprang all the way to that double top high of 2047.50, 27.40 in that area. And now we're back down and we've just hit it. So this could be another little balance attempt in the 10-minute chart. But let me tell you, if this thing breaks 20.28 was the low, if it breaks 20, goes into the 20.26 area, I think we could get an acceleration. So this pertains to a question that I just had. Let me read the question because I'll try to answer in the limited time we have. Hey, Basil, how have you been? Been fine. I shorted the ES at the close yesterday, small position with the aim of scaling out at 2,000 and running the rest. Do you see any chance at all of it heading back down to the 1860s February lows or even lower? Is there any chance we've made a rogue wave, there's a Chapman wave, rogue wave, right arm extension with this rally the last few weeks? It has such a rogue wave feel to it, but yet I wanted to be prepared to buy if we find support. Difficult to separate intuition from the chart message of the markets. Great point, great point. One last question. I've seen reports and graphs of big money selling this rally, yet the OBI, what's the OBI? Shows serious buying. OBI? Okay, you got a minute now. If you can just type in what the OBI is or give it to me, I'll do it tomorrow. Shows serious buying. I thought they would match. Could you please clarify if you ever pay attention to these reports or just OBI? Thanks. I know lots of questions. Is there anything else? And Chris. So Chris, all I can say is that I tell you what I'm going to do. I'm going to show you something, and I'm going to give you my analysis of it. Let me just do this. Let me go to the weekly chart right here because I'm going to spend a lot of time on this in my webinar. You see this match, and I spoke about it right here for my subscribers. I said on the 29th of February, are we here? Are we here? And the next week we were there. And then we hit that trend line resistance, that little cyan-colored resistance block, and never went higher. 321.17.602, I said, that was just 2 days ago. I said, are we here? We're hitting that. This is this week. That was right there. And look, we've bumped into that resistance. So this could be, in fact, a right arm extension, that rogue wave. But there are other characteristics that I want to talk about. So let me do this. We're going to run out of time. I'm going to take tomorrow and treat it as if it's, send some questions to me. Tomorrow I'm going to deal with it as if it's Chapman Wave Friday, where we look at the details of the Chapman Wave methodology in greater lucidity. We look at it in detail. So let me do that. And all I'm going to say right now is the day is young. You're only down 68 in the Dow. You're only down 10 in the S&P. I really need much more. I need the E-mini right now down 13. I want to see it under the 2022 9-period exponential moving average. I've already drawn in that little arch, the cup formation support. Keep in mind, the VIX index is rallying. It's not at 15s yet. By the end of the day, it starts to get into the 15s. We could get an acceleration. I love these quiet moves to the downside. That's what I mentioned to Tom yesterday. We are short, but nothing's going to happen until we get this kind of rug pull, a quiet.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,